strategist at Narrow Gate Trading, speaking through Microsoft Theorem. It's Tuesday, February 25th, 2025, and since I'm only making 1 to 4 trades per day anyway, let me see if switching to an even longer time frame makes things any simpler with respect to the joint trading I'm doing with my partner overseas. For this approach, the main measurements I will have under consideration will be the 12-day, 4-day, 24-hour, 8-hour, and 4-hour price flows. The Aussie yen does not see much of a trend until I drop down to the 24-hour measures. This would suggest purchasing perhaps a 12-hour binary option put contract if and when the rate pulls back above the 4-hour baseline, especially if it does so to such a degree that it finds itself within the vicinity of the top of the 8-hour price range. The Aussie-US dollar is looking at slightly bullish 4-day price action, but the 8-hour flow has been bearish for the past 1.5 days. Should the rate cross over to the contrarian side of the 4-day baseline, it would be entering prime territory for the purchase of a binary call contract, if and when the 4-hour trend reverses direction to head north. Nonetheless, I will also be watching closely in case price bounces off, is rejected by statistical support in the form of the 4-day baseline itself. All of the euro-yen's measures are neutral. About the only halfway justifiable moves would be to purchase a put contract at the top of the 8-hour price range, in the vicinity of 157.30, or a call contract somewhere at the bottom of the range, somewhere in the neighborhood of 156.15. The euro-US dollar is somewhat bullish overall, but 8-hour price action is essentially neutral. This suggests buying the pair when the rate swings back to the lower half of the 8-hour price range at or below the 24-hour baseline in the area of 1.0459. The cable yen is bearish overall, but with a neutral 8-hour price flow. The top of the corresponding range would make for the ideal entry level, shorting the pair at around 189.53. The cable US dollar is trending nicely. Of all the potential trade candidates, the purchase of a British pound US dollar call contract as price is coming out of a pullback in the 4-hour baseline would appear to have the greatest odds, statistical probability, of leading to a profitable outcome. The US dollar loonie is evidencing conflicting signals, and its directional flow is often characterized by consolidation-like price action for days on end, so my plan is to try to avoid trading this pair. US dollar chief is becoming more and more bearish, so it is essentially the polar opposite of cable US dollar, with the purchase of a put contract as price is coming out of a bullish pullback in the 4-hour baseline being the recommended plan of action, provided nothing changes, and likewise with the US dollar Japanese yen, which is already very, very bearish. I'll try to keep you well informed of any developments, but in the meantime, the best of luck to everyone. And until next time, may the peace of God be with you. Bye for now.